Thanks for spending your Thursday morning with us. It's time now for the latest in finance. Jessica Amir joins us this morning, market strategist at the trading platform at Moomoo. Jess, good morning to you. What's been happening on the international markets, firstly?
So much, Thomas, so much. So I guess we might just start with the blue chip index, known as the Dow Jones. That tracks the 30 biggest US stocks, and that actually hit a brand new record all-time high. Woohoo! So taking this year's gain to 11%. Well, we saw the US benchmark, the broader S&P 500 that tracks the biggest 500 stocks, that also hit a new high. So it's up about 1.3% this week, but it takes this year's gain to 21%. Basically, if you invested $10,000, you would have made $2,100. But I guess it's no surprise that markets are rallying. And I'm probably going to have a strong finish this year and into next. And it's all for two reasons. Firstly, the final weeks of December, traditionally the best for this month. December's traditionally also the strongest month for equities. But secondly, crucially, very important, Thomas, markets are rallying because US interest rates are likely to be cut next year. In fact, the US Central Bank actually, they met literally half an hour ago for the last time this year. And great news, no news, they held interest rates as they are. But the devil and the hot sauce was in the detail. They now have said for the first time that they are expecting to cut interest rates by 0.75% next year, which is great news. And this is all because they see US inflation coming down. And they updated their forecast. They see US inflation coming down, Thomas, to 2.4%. That's under their inflation target. Tick, 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 thumbs up. That's good. And so that gives a clear runway and the rubber stamp to be, I guess, slammed down for markets to continue to rally, all simply because, profits can increase because they'll be paying out less debt. And markets will probably continue to rally off this in all other aspects, including commodities, excluding oil.
I've never heard someone so excited about the Dow Jones, Jess. Now, what can we expect on the local front today?
Well, good news. Thanks to the Federal Reserve making that huge pivot and kind of waving the flag, saying that they're definitely done and going to cut. So if you have a look at the futures now, Thomas, they're suggesting a rise of 0.3%. Doesn't sound that exciting, but the Aussie share market has been a bit of a battler this year. It's actually down. Oh, sorry, pardon me. The Aussie market's up 3% this year. So we've underperformed global markets. So the Aussie market will probably rally also for the rest of the year and into next for two reasons: on the Fed cutting, and secondly, we've got great news out of China. They're just starting to pick up imports of Aussie materials for the first time in 2 years, specifically copper. Copper imports into China increased for the first time in 2 years. Phenomenal. But if you want to dive down to the detail, oil stocks will probably have a good day just on the back of the oil price picking up. It's been heavily sold off for some time now, down 20%. Gold's probably going to have a great day. I remember that gold traditionally does well when the Federal Reserve cut interest rates. The last 3 times the Fed cut interest rates, gold went mamushka up to a record high. Over time, though, keep that in mind. And we're probably going to see a stock that's linked to Bitcoin do well today because the Bitcoin price has actually moved up about 2%. There's a profitable company called Block on the ASX, so keep that on your radar. Apart from that, BHP is in the news because the CEO, Mike Henry, has sold down about 18.5 million shares as part of his divorce. I'm not sure why that's in the news, but apart from that, all in all, it should be a very good day for the Aussie share market.
Okay, and just while we've got you there, how are the currencies looking this morning?
Well, it's good news. It's green across the screen, and that's all because the US dollar's down. So when the Fed waves the flag saying they can cut, that's going to push down the US dollar. And the US dollar is now down about 14% from its highs. That's good news for the Aussie. It's currently up buying 66 0.4 US cents.
Good on you, Jess. Thank you very much for joining us. Jessica Amir there with the latest in finance this Thursday morning. Market strategist at the trading platform Moomoo.